Do you think about the costs of borrowing for the United States itself?
No, we do not, and we're not going to.
Okay, I did something really cool in this video. I took Jerome Powell's entire testimony before Congress, and it was hours and hours long, and I sliced out everything you don't need to see, and I put in a bunch of parts that I really think that you do need to see about what's going on with the overall economy right now. They talked about everything. They hit every topic that we talk about in Congress. They talk about everything on my videos. So I guess Congress is watching my videos. So check this out. You'll see what I mean as we go. And just understand, nothing in this video is intended as personalized trading advice for you.
So we have many unusual factors, and I don't think anybody knows with confidence how this is going to play out.
Within 5 years, we're going to spend more on annual interest on the national debt than we spend on national defense. Think about that for a moment.
Cooling the economy means laying off workers. Lowering demand means workers get fewer raises. Of course, there are times when the Fed must act. We can't allow inflation to become entrenched.
12 times that we've seen a 1-point increase in the unemployment rate in a year. That's exactly what your Fed report has put out as the projection and the plan based on how you're going to keep raising these interest rates. How many times did the economy fail to fall into a recession after doing that? Out of 12 times.
I think the number is 0.
I think the number is 0. That's exactly right.
It just is. People will be better off if the whole question of high inflation is just not part of their lives. That's kind of the definition of price stability. It's if people live their lives without having to think about inflation all the time.
Okay, and has unemployment gone down as inflation has gone down?
Unemployment is going down. Yes, it has. To now a 54-year low.
They can get us out of this mess, and I would argue almost an existential crisis as we look at what's going to come at us here over the course of the next 10 years with debt and service on that debt.
My colleagues and I are acutely aware that high inflation is causing significant hardship, and we're strongly committed to returning inflation to our 2% goal.
Congress has over borrowed, and that we have overspent, and that the national debt is at now at least 97% of GDP.
That's just the way it works, and we only have really one tool, which is monetary policy.
My concern is that we could have a cure that's worse than the disease. It doesn't do families any good if we stabilize housing prices while mortgage rates continue to skyrocket. It doesn't matter to me why a house is unaffordable. Maybe the house is unaffordable. Maybe the mortgage is unaffordable. Unaffordable is unaffordable.
In other words, that would be fiscal dominance. If we were, constrained in our monetary policy by the budgetary situation of the United States, and we're not. We're clearly not. The path we're on is not sustainable, but the level of debt that we have is not unsustainable. Is sustainable. Put it that way.
In fact, in October of last year, I sent a letter to Congressional Budget Office Director Swagel regarding the impact that high inflation and the elevated interest rates would have on the cost of servicing the federal debt. His response painted a less than rosy picture.
There's a path to restoring 2% inflation with less significant effects on the labor market than have typically been seen in downturns.
And in case you're getting depressed by this point, by listening to this, I know I am, just bear with me. There's a lot of good stuff coming up, and this is all actually a very positive situation. I've been talking about this big U.S. debt bomb since 2004? Publicly? But now we're finally, for the first time, getting a real good handle on noticing the actual problem and the issues that we're facing.
High interest rates, falling wages, increasing unemployment are all hallmarks of failed policies that end up helping Wall Street, the largest corporations in the country, the wealthiest people in the country.
We think it's really important that we do stick to a 2% inflation target and not consider changing it. We're not going to do that.
For the general public, for those working families and people, why 2%? Why is getting it to 2% so important?
So that has become the globally agreed, essentially all major central banks target 2% inflation in one form or another.
So stick with me a little bit longer. You guys are doing so great. Some of the best stuff is coming up, and this is going to be a big video because there was so much great information that I wanted to show you.
That's what the record would say.
Okay,
And to get inflation down to 2.2%, based on history, an immutable fact, unemployment would have to go to 10.6%.
And what that meant was that inflation, one of the reasons why inflation was low and predictable, is having a real target and sticking to it, not changing it, at convenient moments.
So the Fed has raised interest rates 8 times over the last year in what has been the most extreme rate hike cycle in 40 years.
I think the point that they're noticing the problems is a really good sign. Maybe now, when you notice a problem, you'll start to do things that are required to fix it, such as fiscal responsibility, spending less money, bringing in more money, using the money that we have more efficiently.
Over the past 12 months, core PCE inflation, which excludes the volatile food and energy prices, was 4.7%. As supply chain bottlenecks have eased and tighter policy has restrained demand, inflation in the core goods sector has fallen. It seems as though you're a long way away from anything that looks like a recession, just looking at the labor market by itself. So
you're raising interest rates. You're raising interest rates to slow the economy, are you not?
yes, to cool the economy off.
Explain that to the 2 million families who are going to be out of work.
We're not targeting any of that. But I would say even 4.5% unemployment is well better than most of the time for the last 75 years.
In other words,
and while housing services inflation remains too high, the flattening out in rents evident in recently signed leases points to a deceleration in this component of inflation over the year ahead.
My state of Georgia is in a housing crisis. Like much of the country, the Federal Reserve Bank of Atlanta has designated owning a home in Atlanta as unaffordable to the average home buyer.
Everything you see in this video, every second, is sliced out of the multiple hours long testimony by Jerome Powell to the U.S. Congress.
And one of the ways you measure your success, other than fluctuation in gross domestic product, is the unemployment rate. Is it not?
Yes, one of the measures.
so, Chair Powell, if you reach your goal and 2 million people get laid off by the end of this year, and then, just like in 11 out of 12 times that unemployment has risen by a point in a single year, it keeps on rising. And then we've got 2.5 million people out of work. We've got 3 million people who get laid off. We've got 3.5 million people who get laid off. What's your plan?
How does that help my Nevada families? How does that help people in Nevada?
I'll tell you how it does. And it's I guess it's obviously not it's not obvious how that is, but
You're trying to raise the unemployment rate, are you not?
no, we're not trying to raise it. We're trying to realign supply and demand, which could happen through a bunch of channels, like, for example, just job openings.
All right. Chairman Powell, I also sit on Senate Finance. Right across the way, we are talking about affordable housing. I think for purposes of so many of us across the country, including in Nevada, when we talk about affordable housing, it's also about workforce housing. It's about making sure families that are working so hard have an opportunity to keep a roof over their head. Right now in Nevada, if you're making minimum wage, you have to work 75 hours a week just to be able to afford housing.
Well, right now the unemployment rate is 3.4%, which is the lowest in 54 years. And we actually don't think that we need to see a sharp or enormous increase in unemployment to get inflation under control.
I'm looking at your projections. Do you call laying off 2 million people this year not a sharp increase in
I would say
unemployment?
4.5%.
Okay. So in effect, I'm not being critical. When you're slowing the economy, you're trying to put people out of work. That's your job, is it not?
Not really. We're trying to restore price stability.
No, you're trying to raise
not wages.
You're trying to raise the unemployment rate.
And I think that if you're watching a channel that you like and you want to subscribe to it, you'll subscribe to it. So I don't even want to talk about asking you to subscribe to the channel. So I don't even bring it up ever.
As of the end of December, there were 1.9 job openings for each unemployed individual, close to the all-time peak recorded last March.
Driven by interest payments on the debt, the CBO now projects the cumulative deficits during the 10-year window. And I recognize where deficits come from. It's irresponsible spending here in Washington. but the cumulative deficits during the 10-year window will exceed $20 trillion. The cumulative deficits, not talking the debt, because it's going to grow the total federal debt to more than $51 trillion by 2033.
Although inflation has been moderating in recent months, the process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. As I mentioned, the latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated.
We've enjoyed one of the greatest privileges of the international economy for the last nearly 8 decades, a strong dollar that acts, of course, as the world's reserve currency. You know that better than I do. Now, this has obviously been great for American purchasing power. We enjoy cheaper imports. Americans, when they travel abroad, benefit from lower costs. But it does come at a cost to American producers. I think in some ways you can argue that the reserve currency status is a massive subsidy to American consumers, but a massive tax on American producers.
2% inflation, to have people believe that inflation is going to go back to 2% really anchors inflation there, because the evidence is and the modern belief is that people's expectations about inflation actually have an effect on inflation.
I was distressed to see in the report that that activity in the housing sector has contracted as a result of the elevated mortgage rates, and you've been talking about that.
But like everyone else, we're watching what's been happening in the crypto space, and what we see is quite a lot of turmoil. We see fraud, we see a lack of transparency, we see run risk, lots and lots of things like that. And so what we've been doing is making sure that the regulated financial institutions that we supervise and regulate are careful, are taking great care.
We'd be looking at least 3.5 million people who would lose their jobs.
Activity in the housing sector continues to weaken, largely reflecting higher mortgage rates, and the full effects of our tightening so far are yet to be felt.
This makes mortgages a lot more expensive for families, especially young families looking to buy a house. According to the National Association of Realtors, the share of first-time home buyers is at an all-time low, while the average age of a purchaser is at an all-time high.
Having a 2% inflation goal, which we had for many years, de facto we had it, then we formally adopted it in 2012, but for years before that we were effectively targeting 2% inflation.
At a time of record inflation, where everyday needs are more expensive, we should not be pursuing actions that are harmful. Rather, we should be supporting the engine of our economy, small businesses.
There are some things that we can't affect, but over time we can achieve 2% inflation, and we will.
Chairman Powell, can you talk about the catastrophic damage a debt default would inflict on the economy?
At the end of the day, there's only one solution to this problem, and that is Congress. Whatever else may happen will happen, but Congress really needs to raise the debt ceiling. That's the only way out, in a timely way that allows us to pay all of our bills when and as due. And if we fail to do so, I think that the consequences are hard to estimate, but they could be extraordinarily adverse, and could do long-standing harm.
Now this video got really long really quickly because there's so much stuff I had to show you. So I broke it into 2 parts. We just continue right now on this video right here. You can go to it and we'll just keep picking up where we left off.